What's good, y'all? Welcome to another episode of Cheef and Chart. It's your man Don Bucks, and this is sponsored by Rap and Dough. You know, the home of money conversations. We talk all things Black wealth, but this show we get a little deep. We talk about options trading. We talk about what we see on the charts for us aspiring options traders and stock traders. This is the show for you. So make sure you hit the like, subscribe, and a notification bell so you are notified when I go live. So yesterday, I gave a little synopsis on my What the Charts Say Sunday series I have going on. And pretty much what I said was going to happen, happened. But I got to tell this story because a lot of people think that you have to be right all the time. The market will not allow anybody to be right 100% of the time, but there are some things that make the market have a layer of predictability. That's why you have people that are successful in the stock market, because there is a layer of predictability. So I preface that because I said, yeah, what I said happened, but people don't like to show the fact that they were wrong. And if you watch previous episodes, I make mistakes in my trades, right? But I show you that making a mistake is nothing wrong with making a mistake, especially if you make a mistake and you're not over leveraged. Like I tell you guys to not be over leveraged, right? So it's okay to make mistakes, because if you watched a couple episodes back, I made a mistake, corrected it, because when you make a mistake, the thing is to correct it immediately and don't do it again. Or try your best not to do it again. So I made a mistake, corrected it immediately, and the couple dollars that I lost making a mistake, I made it back and some, right? And I'm still making money on the play because I got back in it. So I'm here to tell you it was okay to make mistakes as long as you're correcting it ASAP, right? And all the preceding things are in place. You're not over leveraged. You pick the right strike price. You pick the right expiration date. You know, all that other stuff is in place, right? It's okay to make a mistake. Just correct it. So, point I'm trying to make is you don't have to be right all the time, right? But I was right again, because if y'all see what the SPY was doing, so let's get into this chart. We always got to look at the SPY, right? Keep your eye on the SPY. I know y'all heard me say it. You got to keep your eye on the SPY, because the SPY is overall market. And a lot of times out of 10, whatever the SPY is doing, the rest of the market is doing. They say rising tides lift all ships. And the SPY is that rising tide. Oh, and by the way, this is episode Pineapple Haze too. I'm tripping. This is Cheef and Chart, ain't it? But I be getting so sidetracked talking to y'all, man. I be forgetting the, light one. All y'all cannabis smokers, I recommend sativas so you can stay active, because people think you go to sleep when you smoke weed. There's sleepy weed and there's active weed. I prefer sativas because I'm an active kind of guy. I got to get stuff done. So I prefer the active weed unless I'm trying to go to sleep. But back to this chart. So this is the SPY, and let's see. Let's put some context in here. So this is the daily chart. This is what happened today. Today is Monday. This was Friday. So let's draw some levels in here. Y'all know we got to draw our levels. And I like to do this live, man, so y'all can see, because I'm actually doing a Options Made Easy boot camp right now. And this is the type of stuff that we're doing in there. Like, we're doing this live, right? We're doing this live because people want to see how to do it. Like, all right, I took your course, but I want to see how to do it. That's what we're doing. Boom. I see that level in there. I see that. Boom. This is a level. And as y'all can see, it's not a skinny line. It's an area because we're going from the bottom of the wick, right? We want to get all that in there because price was there. All right, that's the low. The bottom of the wick is the low on a red bar. The top is the high. So you got to come all the way down to get, as accurate as possible. Don't have to be pinpoint accurate, but it's good to get that in there. If you see it, get it. So here's a level. This was Friday. This green bar, let me get this arrow out. This green bar here, that was Friday. All right. So I said, it's breaking this level. Why do I say it's breaking the level? Because it done went through it. Not only that, but it went through it with good momentum. And as we can see, y'all know how I feel about the MACD. I use the MACD momentum indicator, and it is curving up. The blue fast line is curving, and the orange slow line is curving. So that is bullish, right? We're getting a new high in the MACD. So that's upward momentum, right? So we don't see anything skirting from that. So we drop down from the daily, because we can't trade accurately from the daily, right? We need a trading time frame. So mine is the 2 hour, because I like the distance between support and resistance on the 2 hour. If y'all took my course, you know that you pick your trading time frame based off of how long you want to be in stock. Be in that trade. And you pick how long you want to be in the trade by seeing how long the stock goes from extreme support to extreme resistance on the average. So you can count over the bars. Like, all right, how long did it take before a red bar made a big retracement? So we got, let's go down to a trading time frame, and we can say, like this one here. How long did it take before it got here? So this is the 6th, boom, the 8th. So I like to be in trades 1-2 days. So that's good for me. That's why I picked the 2 hour. And it just so happened to fit on the SPY. The SPY is not my stock, but all stocks trade differently. All stocks have different intervals of support and resistance on different time frames. So this is why I tell people, trade one stock. There's plenty to know and learn about one stock. Plenty. You can make plenty money off one stock. All right. And here, as you can see, look what happened. This is what you couldn't see in the daily bar. And I was just going over this in Options Made Easy on Sunday. You can't see, you just see a green bar. You can't see all the buying and selling because it wasn't all buying that day. The stock market is a big auction place. There's buyers and sellers all day long, buying and selling, trying to get fair value. Prices are trying to get to fair value all day long. So there's buying and selling all day, but you can't see it in that one green bar. The size of it may be able to tell you or give a hint, because if you got a big green bar, that means more buying than selling was going on that day. Got a little bar. So let's see. So this is the daily bar from today. There's approximately 6 hours in a trading day. So if you drop down into a trading time frame, you'll be able to see what was going on in that 6 hour trading day. That's why you can't trade with accuracy as far as your entries or exits from a daily bar because you can't see what's going on in there. You don't know, you can't see. So let's show you how you can't see. So now that one bar from the daily is 3 bars. All you seen was a little green bar. So now you see the bars that made up that green bar, right? This is how you get surgical with your trading because you're dropping down to get, a closer view as to what is going on in the price action. So in that one bar consists of these 3. That's why that bar is so small, because it wasn't a lot of buying or selling going on, as you can see here. All right. And this was the day, this was Friday. So 1, 2, 3. All right. It might have been, you know what? 10:30, 11:30, 12:30, 1:30, 2:30, 3:30. All right. So let's say between 6 and 7 hours of trading day. So they might include all 40s. So it might be 4 bars for the 2 hour. That's what I'm leaning towards right now. After looking at this so many times, it's like, that's what I'm leaning towards, because Friday was this, and the bar was still in the area. So it broke it, but now it wants to retrace. It retraced and sat on top of it. Now see that? It closed right on top of the line. So this is Monday. So this is today. Yep. 1, 2, 3, 4. See, look, 4 bars. Didn't I just tell y'all it was 4 bars? So I was right. So 4 bars is what represents one day. So now you can see what was going on in that one bar and these 4 bars, right? That gives you a better synopsis as to what's going on. So now I know that the 2 hour has 4 bars. Shout out to that. So now you can see. So how did I know it was going to go? Is because I've seen this red bar. And if y'all been tapping in to Cheef and Chart, you would know that that red bar with this corresponding upwards momentum and new high in the MACD, the fast line and the slow line, but preferably the blue fast line, has a new high. That's a momentum divergence. So when you see weakness with upwards momentum, you want to buy this because it's going up afterwards. And lo and behold, look what happened on Monday. So that is one of the key things that I look for in a trade. I look for momentum divergences. And more often than not, it happens because that's a high probability setup. So when trading options, that's what we want to do. We want to put ourselves in high probability setups, high probability situations. So let me show you one again. So after this sold off all crazy right here, I like to look for it to exhaust itself. And let me see a momentum divergence. And here go one right here. You see it start bending up. It's curving up right here. Right? It's curving up right here with corresponding weakness. So that's a momentum divergence. And look what happened. It went up. And once again, I want to be buying all this weakness when I see a new high in the MACD. Look, weakness, new high in the MACD. Look what happened next. Right? So if you have your levels drawn, you know where it's going. So you'll have an idea of what strike price to pick. Y'all getting this? Y'all getting this? It's Cheef and Chart, baby. If you haven't already, make sure you hit the notification bell for when your boy go live. These are the secrets of options trading if y'all haven't caught it. This is the nuance that comes from doing this every day and reading and practicing, looking at the charts over and over and over every day. And you start seeing the same things over and over again. And then you can start applying what you're learning, right? The stuff that you're watching Cheef and Chart, you go and implement, you go practice it, right? Practice. You watch something else, go implement it. Like every time you tap into Cheef and Chart, you're like, oh shit. And then you go look at your chart and then you see it now, right? It's called putting in your screen time. You know what I'm saying? So this is what we're doing. So let me show y'all my play. I don't know why I keep So my stock is in opposition to the SPY. So it's another reason for me to keep the eye on the SPY, because if I know that if the SPY is going up, mine should be going down. If I'm not paying attention to the SPY, I won't know what to do with my stock. And the same with yours, right? But you would be looking, depending on what stock you're looking at, but you always got to look at the SPY, point I'm trying to make. So being that the SPY was going up, I positioned on mine for the down. So Friday, where was I? I think I bought this strength right here. What was Friday? Yep. This was strength right here. You see that? I seen this downward momentum. It broke a resistance. Support. And then there's always a retracement. On an uptrend, it's going to retrace down a tad. It's going to keep going up. It's going to retrace. So I was expecting this retracement of strength in this weakness. So it's another momentum divergence, but this is to the downside. So I see strength after it broke a support. Strength that was going to bounce, because now once something breaks support, it now becomes overhead resistance. Support, once broken, becomes overhead resistance. So now once it broke and it retraces, it has to contend with resistance now, right? But on a downtrend, the retracements are short-lived. And being that it just broke support, that resistance is going to hold most times. Still a chance of it not, right? But my edge says I added all the things together because I see this momentum to the downside, right? A new low with strength, a momentum divergence, right? To the downside this time. So I did puts into this strength. So now I got better positioning, right? So I waited for it to come up some, because the options contracts increase in value when it goes down and you're in a put, right? So that means the options contracts increase in value as the stock goes down. The put contracts, they get more expensive as the stock goes down. So it only makes sense to catch it when it's slightly cheaper, when it retraces into the strength, when it goes up, because then it gets cheaper. The options contracts get cheaper when it goes up, because if you're in puts and the stock goes up, the options contract loses value. So if someone is looking to buy puts, they'll be cheaper if the stock is going up, because the benefit of doing puts is it profits when it goes down, or the options contract increases in value. It costs more as the stock goes down. So it makes sense for me to wait for that retracement when it goes back up. So I'm getting better price and I'm getting a better position because I want it to fall from a higher place. Right? The further it fall, the more money I make. So if it goes up, so now it's falling from a higher place, right? And I get a better price. So that's what I did here on Friday. And this is what happened Monday. Took profit right here. And I see the same thing going on. As the SPY is positioned to still go up, I go back to mine, which is this one. I see it still in a position to go down. And look, right? I took profit here and it tried to retrace. But look, it's contending with this level here. So I see strength, but also more weakness. So I did more puts. As soon as I seen this strength and it stopped, like right here, I was like, okay, I see this strength. This is where I need to be getting my cheaper put contracts because it's still going. We got a newer low with strength, momentum divergence again. Right? Y'all getting this? And I'm in it again. This is how you can stay in one stock if you know what you're looking at. Y'all getting some out of this, man? Put some comments in the comment section, man. This is Cheef and Chart. And y'all also know, before I get out of here, I've been checking out another stock. You feel me? I've been checking out another stock just in case I don't want to use this one. This is where y'all going to get. Like right now, I'll stick with one stock. Get comfortable with knowing what you're seeing and what's going on one stock and how it interfaces with the SPY, right? Get to know that first. Then you can, get another stock on your plate. But I'm in GoPro, y'all. I'm in GoPro. And what did I do with GoPro? Oh, you know what? This is what happened with this one. Being that I seen, this is ill. I'm getting fancy, y'all. Getting a little fancy. Was that one? Oh no, I was already in GoPro. I don't know if I told y'all about this. I probably was sneaking and I ain't tell y'all, but I hopped in GoPro yesterday. Was it yesterday? No, it was Friday. Bought 4 contracts of it. Tight bid ask spread. And they was only 17 cents or $17 a piece. $17 a contract. So I bought 4 of them. Like, now, mind you, I'm still trading out of this small account. I told you I'm doing this small account challenge. I started with $100. So I'm running it up to $1 million. Y'all heard it here first. I'm running this account up to $1 million right in front of y'all face. And I'm showing y'all in real time what I'm doing. No cap. I wish I can show y'all maybe I can start screenshotting my trades. I mean, not screenshotting them, screen recording. Maybe I could do that. But I'm going to run this account up to $1 million. I heard it on Cheef and Chart. So I sold 3 of them. Sold 3 of them this morning. It ran up. So it did what I thought it was going to do based off of what I just showed y'all, right? So, boom, where were we? Let's draw some levels. That's the last joint. And I'm going to let y'all get out of here and digest this. So, it's the daily. Y'all see how that level working right there? Boom. That's one. Four. Tedious work, but somebody's got to do it. How we print it, y'all. This is how we print it. For real, man. Shit changed my life. Show y'all this here. Boom. Boom. All right, so that's the daily levels, right? So let me drop down into my trading time frame, which is a 2 hour. I always go to that 2 hour first just to see how looking on certain stocks. So now we know what the daily, because the daily is going to hold precedent over any lower time frame. The older time frame holds precedent. So whatever the older time frame is saying is going on, that's the one that's going to hold precedent. So if you drop down into this 2 hour and it's doing something contrary to the daily, it's going to be short lived. It's going to go back to what the daily is doing eventually. So, as y'all know, if y'all took my course, hopefully you did. If not, feel free to hit the description and grab that intro to swing trading. Each time frame has their own levels. Each trading time frame has its own levels. So now that I know which ones are the daily, now I can draw my trading time frame. And it might help to label them so you won't get so confused, because we want to keep this stuff as simplistic as possible. You don't want to add too much going on your chart. You want to keep it really simple. All right, so what did I see? Intermediate level here. Is that even worth? Yeah, man. I'm gonna put it. I ain't even going, you know what I'm saying? I'm gonna put it. Let's not do that. So what was Friday? Friday was the 9th. All right, so this is what I seen. I seen it break it. All right, I seen it break above this level here. And I said, I'm looking for weakness now, because I seen that it had upward momentum. So when I pulled it up, it was doing this right here. It done broke this level right here. It was doing this. So I said, as soon as I see some weakness, I'm going to do calls into it. And here it go right here. Here it go. So at the end of the day, I seen weakness with this strength. And it was bouncing off of support. And how did I know it was bouncing? I dropped down into my relatable, which is the half an hour. And where is it? The 9th. This is it right here. So I'm like, okay. And if you notice, if I was to drop down Um, also dropped down even further, which I probably did, the 5 minute. Where we at? Here's the knife. Yeah, I don't know if I did this. I don't remember. But what I said, it's bouncing. That's what I said. Because on my trading time frame, I seen strength in this weakness. That's what I seen. And plus on the daily, this was curving up. I said, man, it broke this resistance right here, man. That was my edge. And after looking at a certain stock for so long, or looking at charts for so long, it's like some stuff becomes like second nature or intuitive. So that right there, I think that's what did it for me. That momentum divergence right here, plus the fact that it broke this level here, broke this level, and then I seen strength right here in this MACD with this corresponding weak bar, momentum divergence. So what I did was I got a $6, which is the next level up, a $6 strike price, 15 days out. Woke up this morning, it was up 38%. I sold 3 of the contracts and let one ride. So I took profit, basically everything off, well, what I spent on the play and a couple dollars on top. And now I'm playing with house money. And according to this, it's still going up. And I still got time on the contract because we still have strength in the MACD and it just broke another resistance level. We printing over here, man. If you just pay attention and stick to the script, practice this, look at what I said over and over again. So that's what I got going on, y'all. Make sure you hit the like, subscribe, and notification bell if you want to learn how to swing trade options. Feel free to hit the description and go grab that and see what else I got in my portfolio because it's pretty extensive. It's your man, Don Bucks. I'll see y'all tomorrow. Peace.